Welcome to the Magnify Wealth Podcast with Scott Gannon, where we explore the power of the infinite banking concept, combined with the value of cash-flowing investments for business owners and real estate investors. Join the team as we dive into case studies, interviews, and strategies to help you grow and protect your wealth. Gain valuable insights and actionable advice to magnify your wealth today.
Hello, everybody, and welcome in a bit of an abbreviated episode of the Magnify Wealth Podcast. We're here with our host, Scott Gannon.
Good day, everybody.
And today what we're going to be talking about is what Nelson Nash, the founder of the infinite banking concept and author of The Incredible Becoming Your Own Banker, what Nelson has coined the problem with finance in North America today. What's that, Scott? You want to fill us in with
Sure.
what the problem is?
Sure. The problem, as Nelson defined it, is you finance everything you buy. And what he means by that, or everything in life, and what he means by that is you either give up interest by using your own money, or you pay interest when you borrow someone else's. But the reality is when we flow that money through regular commercial banks and just pay cash, that money is gone and gone forever. So what happens is we lose what's called lost opportunity cost, because once you spend $1, you can never spend it again. It is gone forever, and so is the growth that dollar could have had. So a great way to visualize this is to think of, let's just say you're buying a car. Do you finance that car, or do you save for it first? I meet lots of people that say, I pay cash for everything. So they save. They save. What if that takes a year or 5 years? And then they make their purchase. They go back to zero. Then they save, drive their vehicle, replace it, back to zero. Save again, back to zero. You get the idea. So they're gaining interest on that, by the way. But the other side of the coin is if somebody wants their car right now and they don't have the savings, then they finance. Okay, so they borrow the money and they continually pay it back. Borrow the money, pay it back, and so on. The thing that's exactly the same about these two scenarios is you always end up at zero. So if you visualize that you own 30 cars over your lifetime, or 20 cars, or 10, or 100, I don't care how many it is, all you have left is whatever the residual of that car is worth at the end of your spending years on vehicles. I just use cars as an example. It's not something that we do a lot with financing cars, but it's definitely something that is easily to describe the problem.
And it's where a lot of people end up giving up interest over the course of their lives.
For sure, just by saving to do it, or paying interest, right? So the key here is as long as you're giving that money over to somebody else, that money's gone and gone forever, and whatever you got is the residual value of the last car you own.
So Nelson found a solution to the problem. So how about we get into what the solution is, and really what we help people do at Magnify Wealth?
Sure. So the solution really is creating a system of financing yourself, and i.e. becoming your own banker, or the infinite banking concept. Something we talk about all the time around here, and it truly does work. It's about creating a bank of your own, so that when you need money to finance a car, ideally finance an investment, that's really what we like to talk about, is use this money for investment purposes. But understand that all your money you want to be as much as possible flowing through your bank. And when it does, it continually grows. And this is how you avoid lost opportunity cost. Is you accumulate this money, and it always grows. Now, I could go into the weeds about how the infinite banking concept works. The product used is very specifically designed, whole life insurance, but that's for another episode.
That's not the concept. The concept is creating your own bank. There just happens to be a product that is the best at doing that.
Sure. Exactly. The infinite banking concept is a solution to that problem.
I guess why don't we explain to the viewers a little bit about how this causes you to not have that interest flowing somewhere else? Like, how do you actually, like, if you've built your own bank,
The wealth creator.
well, if you've built your own bank,
Yes.
how do you go and buy that car now? I know we often talk about buying investments, but we've been talking about a car. How do you buy the car?
Well, you can choose. So if basically our position on this is you finance it. And again, you finance it whether you pay cash or not. Never pay cash for it unless you're borrowing it against your own bank. So if you were borrowing it against your insurance policy, which is your own bank, then go pay cash for it. So there's no lien on it. It's unstructured payments. So there's lots of benefits to having your own bank. You don't have to apply for the loan. It doesn't appear in a credit report. And again, it's flexible. So if you run into problems, you don't have to, you can skip a payment if you want. So there's lots of benefits to doing it that way. But really what it is understanding how that mechanism works inside the policy. Is you are borrowing the insurance company's money, not yours. Your money is still growing. You have $50,000, $100,000, $1 million, whatever you have in that policy. Whatever you leverage out of it or take out of it for to purchase a car or a real estate property or whatever, that is borrowing the insurance company's money. Your money is still growing at the same number it was. Let's just say it was $100,000. Well, you could borrow $90,000 of that, 90% of the cash value on demand without applying, and your 100 is still growing at interest, tax-free from 100, not 10.
The reason that becomes a solution to the problem is because you have that 100,000 growing from 100 and not 10, you are not giving up interest to do this. You are accumulating interest on your savings, your entire savings, the whole time, even while you go and finance that car. So you're financing it in a way that doesn't give up that interest, like paying cash or financing in a traditional method.
Well, another way to put this is we just talked about the zero line, right? So you save your money, pay cash, you go back to zero. Borrow money, pay it back, go back to zero. Well, this way, right from the first payment, you're never going back to zero. That money is guaranteed to be there forever. As long as you don't withdraw it or cancel it, you use it as a borrowing machine, or like a bank does, it will never be zero. It will continually grow for the rest of your life.
When you pay it back, you're not. Yeah, you're still
you're
paying it back to a bigger number than you left it.
Exactly, and you're just by paying it back, what you're doing is you're just creating yourself more capacity to borrow again for something else.
Do you have anything else to input into the conversation, or do you think we should let our audience go with a little bit of an idea for the future?
Yeah. So we'll I'll finish this off with this. One thing to understand is exactly what I just said. Is once you start putting money in, the idea, if you visualize that you're always at zero, whether you save, whether you're a cash purchaser or financer, you're always back at zero. You can be away from zero forever with paying your first premium on a well-designed, dividend-paying whole life insurance policy.
AKA your own bank.
Your own bank, exactly.
All right. We'll see you guys next week. Thanks for tuning in to the Magnify Wealth podcast with Scott Gannon.
Thank you very much.
Thanks for tuning in to the Magnify Wealth podcast with Scott Gannon. Remember to subscribe on YouTube or your favorite podcast platform for more insights on the infinite banking concept. Until next time, remember, immediate action is the most efficient way to achieve your goals.